So, Christmas, here it is again.
I know.
Our 20th Christmas.
Yeah, it's another year closer to the grave. Each year goes through so fast, doesn't it? So, Merry Christmas. Welcome to Inside Property and Finance Podcast. Today, I'm here with Paul Rawson, my business partner. Paul McFadden is off somewhere sunny, so he isn't with us today, unfortunately.
It'll be so much better without him.
It will, of course it will.
So, Christmas, here it is again.
I know.
Our 20th Christmas.
Yeah, it's another year closer to the grave. Each year goes through so fast, doesn't it? What's going on?
That's a nice, pleasant thought. So, 2023.
2023, yeah. Let's recap, shall we?
What do we have to? It's not been great at times, has it? Well, there's some good, isn't
Yeah,
it?
it's been a challenging one. And I've not looked at the numbers yet, but I think they're a little bit better than the year before, aren't they?
Slightly.
Good.
Yeah.
Good.
Which, considering, I mean, we came into 2023 still with the fallout from the mini budget, didn't we?
Yeah.
I keep saying I'm going to stop talking about this, and it keeps coming back.
Yeah, you like to punish yourself.
I had to punish myself, yeah. So, the lending market was very subdued because of that, wasn't it?
Yeah, it was.
And we were just starting to see something subside, maybe towards the end of quarter one, beginning of quarter two. And then we got inflation, didn't we?
Yes.
And, massive interest rates. And, it certainly subdued borrowing, didn't it, for probably till the summer, would you say?
It did, because the summer, I know it tends to go a little bit quieter, doesn't it, in mortgage world, but it was particularly quiet or noticeably quieter in July and August. And then, of course, we saw the pickup as we got into the autumn. So, yeah, it was a challenging year. So I guess we've got to look back and think, in terms of business performance, it's not bad. We've got to kind of... I don't like to make single-figure improvements. I like to make double-digit and treble digits, but it's all right.
Do you think that it's the old, it's been a game of two halves? It's about the right way to... Yeah. So quarter one, quarter two... Still have all those problems we just mentioned, but then since the kids went back from the summer holidays, certainly in our business, we've seen an uptick to the point where best month on record ever.
Yeah,
November.
Yeah,
November.
I know.
The
last 3 months have just been
not just by a little bit, was it?
No, considerable. So yeah, that's really helped us November, but the last 3 months have been particularly good. But people have to take action. They have to move. They can only put off that for so long. And I think just seeing that pause in the base rate and the messages coming out to say we're probably at the peak now. Yes, rates are going to stay a little bit higher for longer, but at least people are thinking my costs aren't going up any further.
Yeah.
So let's take some action. That's certainly helped.
Yeah, fixed rates coming down all the time as well.
Yeah.
And obviously we're just a couple of weeks away from 2024, and I know there's still time yet, but. That massive property crash that 2023 is going to have. Yeah. Do you think it's going to happen in these next couple of weeks?
It could. There's still a possibility. Maybe 1 in a million chance, but there's still a possibility.
Just goes to show, doesn't it? Yeah. So at the beginning of the year, mainstream media, loads of commentary. We're going to have a crash. 2023 is going to be the year of the crash. Don't forget, it was going to be 2022 and 2021 and the pandemic and all that.
Of course.
But it was definitely going to be 2023.
Yeah.
So I don't know what these next couple of weeks are going to bring after this recording, but, hopefully we're all still functioning here.
Yeah,
and
not
the world's not
obliterated.
melted. Yeah.
Well, the 12 months leading up to, when were the stats out? Mid-November. The 12 months leading up to September in terms of house prices were out, and it was minus 0.1%. Like in the UK.
In the UK, yeah.
Like Scotland had done the best. Scotland, it was 2.7 or something like that as an increase in house prices.
Yeah.
And then I think Northern Ireland had done particularly well. And then we were next in line with like minus 2%. But the Welsh, fortunately, were at the bottom. So that's all right.
Yeah.
But yeah, on average, it was... it was minus 0.1%, and the predictions were generally between, if I remember rightly, 5 and 10% reduction in house prices.
Yeah, a bit more with some people.
Yeah.
Yeah, but no. But maybe it's going to happen in the next 2 weeks.
It could do.
We can't rule it out.
Yeah, it's a possibility.
I don't think so. But it's strange because, going a bit deeper into house prices, this has cropped up in some of the presentations that I've been doing around the country. And it's good to start to hear people get beyond the mainstream media, the London-centric, this is what's happening, and it doesn't matter what the rest of the UK is doing, this is all that matters. And when you delve down into by region, you get a whole different story completely.
Oh, yeah.
And actually what you do find is, if we believe that a crash is defined at 10% drop, some parts have had a crash.
Oh, yeah.
Chelsea, Kensington, according to ONS figures, down by over 10%.
Yeah, and you wouldn't think it. You wouldn't think it from previous years. Normally in tough times, uncertain times, the more affluent parts of the UK tend to be a bit more resilient and push on, but no, it's been the opposite.
Yeah, and then at the other end of the scale, there are regions, again, ONS figures, not mine, not yours. These are recorded figures, up 15% and more.
Yeah.
25% swing. So I think it goes back to, there's a lesson across 20, that lesson exists all the time, doesn't it? But certainly if you just take those figures in 2023, people getting into property, they really should understand the area or the gold mine area.
Yeah.
And ignore the white noise almost.
Yeah. Yeah, you've got to tune out to the mainstream. Obviously, listen to it, be aware of it. But no, you've got to hone in. You've got to niche down on your strategy first of all, but your area, because there are such regional differences.
Yeah. Here's one for you this time of year, right? I was asking one of our investors this, and I'll tell you what he said when you answered. Yeah. End of November, going into December. Is it worthwhile looking for a property investment or not?
My answer to that is absolutely.
Yeah.
And I can say that because I've done it. I've bought a few deals over the years where I've got my best price reduction in December. And the reason for that is because, in my mind, the summer period is generally a little bit subdued, family holidays, etc. September, people take action, they put the property on the market. If they've not sold the house within 3 months or got a buyer for it, 2-3 months, people get nervous, don't they? And they don't want to go into a new year with that still on the market looking stale.
Yeah.
So they're more susceptible to an offer.
Yeah. Yeah, this really long-term serving investor I'm referring to, he says you're wrong.
Ah, well, okay.
I'm joking.
I'll listen to him.
Totally agreed with you. Totally agreed with you. No, he said, if anything, it's the best time because of what you've just alluded to. And there is a stat, actually, that backs this up. Properties at this time of year tend to go for 5% less.
On average?
On average.
Right.
Than what they do at other times of year against asking price.
Interesting.
So, and that's an average, yeah. So clearly there's,
Yeah, and I think as well, the dark nights, the appalling weather at times, that all has an impact on people's moods, and they probably think less optimistically, and it's more doom and gloom in their heads.
Yeah.
And it's all perception, isn't it? But they don't want to carry that into January and think, God, we might be waiting till the spring until we get a decent offer. We absolutely can't do that.
Yeah. Yeah, how many investors do we know? And general population, of course, as well. You go, there's no point bothering at this time of year. No one's doing anything.
Exactly.
And it's like, what? It's not what you've just explained. It's not what time-served investors are thinking. They're like, we know that this is the time of year when people are going to take a bit more of a hit. So they're at it. Yeah.
Oh, definitely. Yeah. Somebody once said to me that whatever is going on in the mainstream in the world, we're 180 degrees away from that in a lot of cases. Yeah. So again, what the populist group of people are doing, just do the opposite.
Yeah. Okay. So what about 2024? Are we going to be brave here? So you and I make a prediction on camera that we can revisit in 12 months and see how good were we at that, yeah?
Yeah, okay. I've not given it much thought, actually, so I'll have to just quickly process that.
On the spot, yeah. Do you want me to go? And then you can have a...
Go on, you go first, and then I'll pick out the best bits from your...
Or you can just ignore me as usual and then say what you think.
Okay, yeah, fair enough.
So, interest rates, yeah? Quite clearly, fixed rates have been dropping towards the end of this year. I think that's going to continue to a certain extent. there's less pressure from swap rates and the Bank of England base rate, as we've already discussed in previous episodes, and that looks to continue. If anything, it might even be a bit easier than what people think. And of course, lenders there's definitely a price war going on, whether they'll admit to it or not, because it's almost every single week. Every lender's coming out with, these products are getting less, these products are getting less, and they're not doing that if they're awash with business.
No.
Yeah, despite the changes to the predictions on the base rate and what swap rates are doing. So I think that will continue to a certain extent. It's amazing though how we understand that where the base rate's at in a particular moment doesn't necessarily affect the cost of everyday borrowing.
Yeah.
But how many people just don't get that, including journalists who comment on the market.
Yeah.
It's almost like we've got to wait for the base rate to drop. Yeah. So this is coming on to my prediction for 2024. By the way, I'm not going off on a tangent.
Right.
Yet.
Okay.
For the masses,
I've just fallen asleep then.
Sod you. For the masses to go, base rate's dropping, that means it's time to buy. Yeah. Mm-hmm. When we know that other rates have been cheaper anyway, and there's a lot of commentary out there from economists that they think this is going to be Q3,
right?
Back end of Q3.
Yeah.
Just a couple of things that have come out recently. I've just got a little bit of a feeling, so I'm going on record here. Yeah, we'll check in a year, or even halfway through the year after what I'm about to say. I think the base rate will come down towards the end of Q2, the beginning of Q3, whereas a lot of the experts it's Q3 going into Q4. I know some are saying more towards what I've just said as well, but I do think it'll be on the earlier side, and I think that will promote a lot more market activity because the mainstream media will get hold of it. It'll get into people's heads, and on top of that, I think that rents flying up are just going to push people more back towards buying than renting.
Yeah,
and therefore, again, I think we're going to see much the same because there's some downward pressures as well. So again, I'm sure there'll be a load of 2024 is the year of the crash, yeah. Because you keep saying it, eventually you'll get it right, won't you?
Yeah, of course.
Yeah, and then people go, I've got to see I was right. Yeah, no, you're right. You're wrong for 10 years, you're just right this year. So I think that house prices will be very much the same as 2023, and there'll be some regions that do better than others. And so in summary, I think continue dropping rates, especially when the base rate does start to go down, and nothing major in the house price market.
Yeah.
Again, there's people out there thinking that speaking to someone just on Tuesday, he thinks it's going to boom.
Right.
Yeah. So I've heard different ends of the story, and maybe I've just been pushed in the middle because that's often what you do.
Yeah.
But yeah, that's me. What about you?
Good. Before you gave your prediction, I was actually thinking that, and I'll qualify this, that the base rate won't come down until either August or September.
Yeah.
And if I had to pick one, I'd probably say September, but I'll go with at the end of August, early September. And that's because I think there'll be an uptake in activity as we go into next year, February, March, the spring months, the early summer months. But because we tend to see a bit of a subdued market in July and August, coupled with, there's still a cost of living crisis for a lot of people and food, fuel and all the rest of it. I think it's going to be at the end of the summer holidays as we know it, that the rate will drop to sort of kickstart the market a little bit more, to make sure of it as we go into that last part of the year. Yeah. In terms of house prices, I'll be very surprised if house prices for the UK as a whole go outside of plus 5% or minus 5%. I think it's going to be, I know that's still a 10% swing, but I'll be very surprised if it goes outside of that. If I was to put money on it, I will go for a 2% increase in house prices throughout the UK in 2024.
2%? That's very specific. You've been a lot braver than me there. You've been very specific. I've gone like quarters on the rate. Good reason for that. I can't remember which months they don't meet in. So I'm now hoping that August or September. What did you say? September. Is that a month that they meet? Anyway. But house price is 2%.
I've got no crystal ball, so it's just pure subjectivity, isn't it?
Look, people get paid a lot of money just to predict these things, don't they? Huge amounts of money, right? And they've certainly got it wrong a lot. So we're allowed to get it wrong if we are.
Of course we are.
It's a bit of fun. What do all these lot out here think? Put your comments in.
Yeah, put your comments in.
Come on. Let's see, if you sat at home going, what do these two know? They're idiots, right? Come on, well, put your money where your mouth is. Put in the comments what you think house prices are going to do and what you think the base rate's going to do in 2024.
Any wild predictions? I mean, speaking to a landlord that Joe and I went to see,
Yeah.
A landlord, no mug, he's early 60s, he's amassed 150 properties in the time that he's been buying property. Now, he thinks it's going to boom. He thinks the next 2 or 3 years we're going to see quite a significant boom, certainly in his part, which is in a certain part of Greater Manchester where he's investing in.
Yeah.
And he was qualifying it in the meeting that we had as to why he thinks that. And I mean, a lot of it comes down to supply and demand, but also the cost of rent and stuff like that and inflation. So it's the usual metrics that we look at. But interesting to hear, he thinks it'll go from, I want to say like 170 odd grand to 200 grand is his price range now, and he thinks that's going to go to 250 within 2 or 3 years. So that's reasonable increases that over a period that a lot of people think stagnation and maybe a bit of a reduction or even a crash with some people.
I'd take that.
So yeah, definitely. Yeah. So he's going at it hammer and tongs. He's got 150 properties now, and he wants to be building a portfolio because he's got his son there, and pass on that legacy. And he, over the next decade, he wants to build that to 400 properties. And he's got a proper plan in place, strategy in place to do this. It's not airy-fairy stuff. And it's strategies that you and I both know about. So, no, I like his boldness and his tenacity, especially a guy that's early 60s, that's pretty wealthy anyway, doesn't really need to do it, but he's got that motivation.
So that's 2 large landlords. One's saying that to me. It's going to boom was the word he used. Your guy's into like, what, 30-odd% increase over the next 3 years?
Significant increase, is it? I think I'll coin that phrase.
That's interesting, isn't it? Real interesting, yeah. There's no denying it. The demand and supply argument is there. We need over 1 million houses to satisfy demand.
Yeah.
I know sometimes we've got to temper that with, well, that's like dormant demand and supply in many cases. House prices are more driven by activity in the market, and not everybody's trying to buy and everybody's trying to sell, and that million shortfall, they're doing other things maybe. And maybe active demand and supply is a bit more subdued, especially at this time of year.
Yeah.
But, you can't escape the fact that people have got to live somewhere.
Oh, yeah. And with regards to data, we've just got to be careful which data we're looking at, because some of it, of course, is like nationwide, isn't it? Or Halifax house data, so it's just their transactions. Yeah. And of course, a lot of people, as you know, pay cash or don't have a mortgage to buy property.
Yeah.
Some stats are based on market data, like through Rightmove, etc. Others use just purely land registry figures, so it includes off market and on market.
Yeah. So
it's just being aware of these different metrics and maybe, shoving them all down on paper and, right, what's the mean or the average of all those?
So it's the data point that you're referring to.
Yeah.
Some stats you read is on about asking price almost, isn't it? Where that is at. And others at the other end of the scale, ONS is, this is what actually happened. But it was a few months ago that this
That's
happened.
Historic data, yeah.
So it is a bit of a balance in that, of course it is, yeah. I might have to revise my estimate to 2.5%.
Oh, just so you've got everything up to 10, maybe. You've got that.
Like that, yeah. It's good. I like stuff like this. Everyone's human. Everyone's got an opinion. But it's just the bit that gets me sometimes is the self-fulfilling prophecies that when things are driven by media spiel, and you think that's not quite true, but the fact that they spout it kind of drives it to be true at times.
But we've got to remember it's such a popular asset class, not just to people within the UK, but overseas as well. And it's a little bit like gold, isn't it? We're seen as a safe haven. It's a hedge against all these things that can happen in the world, the world blowing up, UK property. And it used to be London was that hedge, and now it's not just London, it's other cities and towns.
Do you think there's an argument then that, again, I'm on about predicting house prices here, that previously people used to often use cycles, and
Yeah.
you know, again, we won't go into too much detail, I'm sure, because we've done this on a previous episode. Do you think there's an argument that because the underlying metrics of the world has changed so much that you can't rely like you once did on previous data?
I am a believer in that. Yeah, people used to believe the 4-minute mile wasn't possible. Physiologically, we couldn't break the 4-minute mile. Look what Roger Bannister did. So I'm not massive.
Have you ever broke the 4-minute mile?
Not quite.
Not quite.
Maybe a minute too slow. But no, I think that.
I've definitely not, just in case you were wondering.
Oh, right, okay. Yeah. But you've broke the 10-second 100 metres, haven't you?
11.
Ah, there we go.
11.
Yeah, I think with property cycles, because you've got some really interesting facts and data, some proven strategies. So is it 18 years, the typical property cycle that we talk about? Yeah. It's not going to go from 18 to 30, but you know that could be skewed slightly. And with all the sort of geopolitical challenges and what's going on in the world, why can't that 18 change to 21 or 15 next time around? So I'm not a big buyer into it will be exactly 18 or 19 or 17. I think that there's many variables and we have to take those into account. Yeah. And it's just stuff like quantitative easing and all that's gone on since the last proper recession, in my mind, like the 2008-9 period. Like all that sort of false injection into the economy, that can prolong the inevitable, can't it? Mm. So it's very hard. You've got to keep your ear close to the ground, speak to various people, not just agents, not just landlords, investors, but as many different people as you can, trusted sources, to then cultivate your views on things.
Yeah. So I can unfortunately remember nearly 30 years of this industry now. This is the thing. And the buy-to-let industry was so minuscule for a start. Yeah. And then it's grown to something really quite prominent. Yeah. So that's a difference for me. And I know some people are looking at exiting now, and other people it's like, oh, buy-to-let's dead and all that. But we're not seeing that. We're just seeing people acquire property left, right, and centre more than ever. But then on top of that, even when the buy-to-let became quite prevalent, it was how many overseas investors were we dealing with at the time? It was like none, wasn't it? Yeah. And now there's money coming in from all corners of the globe. Yeah. Like you were, however you just explained it, we're seeing it as a bit of a safe haven for investment. Yeah. And again, this isn't just overseas people borrowing money to get in, they're buying it cash, aren't they? Yeah. And then finally, you've got institutions like Lloyds Banking Group who are like, we want to be the biggest landlord in the world kind of thing, and the UK is where we're going at. Surely those things have got to mean that historical data, when those things just weren't in existence, is less and less reliable. Yeah. And it might be that of course at the minute, we're not seeing huge growth, but we might find that it's less this.
Yeah, less pronounced.
And just a bit more.
Well, that's it. Regulatory changes and the geopolitical issues that we talked about, they have massive impacts on things. Just the regulation, like with the tax side of things for landlords. We started banning personal names, didn't we, many years ago? But
it didn't matter then, did it?
No, not at all. But but it's now limited companies, and even the landlords that are only after a few properties are still looking at limited company structures to purchase those properties within. Yeah.
One thing's for sure, people still want to buy houses, people still want to sell houses, people still want to invest in property. And anyway, you've heard our predictions.
Let's hear yours.
Yeah.
So until next time, we'll see you in the new year. That's bye from me and bye from him.
Right.